What's going on, everybody on YouTube? I'm back again with another video. Now, this week's video is going to be about basically me breaking down this strategy that I use to help me pass my Topstep funding account. Now, this is one of many strategies that you can use to implement into your day trading strategy. I didn't use this one 100% of the time for my challenge, but it is definitely a strategy that I did use to help me pass. Now, there's many ways you guys can implement this strategy. It works on high time frames, small time frames. Really depends on how you want to implement it, depending on your risk tolerance, whether you like a smaller stop loss, a bigger stop loss, and so forth. So remember, just take this strategy with a grain of salt, tweak it if you'd like. I do have a more in-depth version of this strategy through my Discord, where I actually do break down a little bit more in depth, like exactly how I place my stop losses, place my break evens, or determine where I place my take profits. So I'm going to give you guys a pretty generalized idea of this strategy, and then you guys can tweak it on how you guys like. Let's get right into it. Alright guys, so as you can see, my trading view is open. I am going to be going over oil today, and I'll be covering kind of the key points of liquidity or liquidity grabs, and show you guys how you guys can use this in your day-to-day trading. So as you guys can see here, I have the 15-minute time frame on right now. We are on crude oil futures right now, and what I like to do is I like to go to the 15-minute or even the 1 hour and just kind of see these high key areas of liquidity. Same with this one, so I'm gonna label these for you guys. I personally do like to trade New York session. Going into the morning session here, I do see liquidity right up above here, right? This right here, this is liquidity. Now, as I'm waiting for this morning session to happen, let's kind of reverse here a little bit. There's two areas that price can go, possibly, right? Targeting this low liquidity right here where my mouse is, or up here. Now, I like to look at price when it enters these areas. As it enters these areas, I know there's going to be some sort of reaction. Now, based on that reaction, what the price action is telling me, I'll enter the trade. When price enters this top liquidity here, I like to go down to the 5-minute, even 3 minutes sometimes, and look for an engulfment. Okay, now as price is entering here, on the 15-minute, you're not going to get a really good entry. Now, this, depending on what time frame you're going to enter these trades on, depends on your risk tolerance. And I say this because on the 5-minute, you are going to get a wider stop loss, but you do have a less chance of getting faked out on these kind of entries. The lower the time frame you get, 1 minute, 3 minute, the tighter your stop losses and the better your entries are going to be, but the more easier it is for you to get faked out and be able to take losses. So take that into account depending on your risk tolerance. Now, you could wait for like a 5-minute entry. Let's see what happens here. Boom. Enter off the engulfment, right? However you want to place your stop loss. If it's right below this, if you want to give it some room, whatever. Now, you can take it to the nearest maybe demand area, supply and demand area, or you can take it to the low. To keep it simple, let's just place it right here and see what price does. If we're going to get a nice 1 to 3 off this. And look at that. This is 5-minute time frame, right? So this took about almost a little less than an hour for price to hit a 1 to 3 RR. Now, like I said, depending on your time frame, let's say you're a 3-minute time frame kind of guy, your entry would have been relatively around the same. So, and again, that can change depending on the situation, right? Now let's go back to, let's do one more example. Now we can use this high time frame liquidity area right here. Let's go back. Cool. Now let's go down to a smaller time frame, 5 minutes. Now again, I want you guys to see this, right? I want to label it for you guys as well. High time frame liquidity area. Price comes up and sweeps on it. Now you're basically at a premium here. You're at a high that hasn't been hit in 3 days, 3 different sessions here. You're gonna get some kind of reaction because at this point it is a little overpriced in this short-term area right here. So I expect some sort of reaction. Now if you trade on the 5-minute, 3-minute, whatever, it's gonna differ. Now here I did take a 3-minute entry. See, I didn't do this engulfment right here, but let's just say you did enter right there. Give your stop loss some room to move and breathe. This is a almost 1 to 3 here. If you trade supply and demand, you can even implement supply and demand into your thing. That's what this box is here. And look at that, take profit hit. And this is just on one pair, guys. This is oil. And again, if you trade multiple pairs, you can implement this on a bunch of different pairs. Now, this strategy is definitely used for if you're at the end of a range, like if it's been bullish for a bit or bearish for a bit and you're taking out previous high time frame liquidity, expect some sort of reaction since you're so oversold, so overbought. Expect some sort of reaction. That was 2 examples of liquidity grabs that you guys can take and implement this strategy into your day-to-day trading routine. And again, like I said, modify this to how you trade. There isn't no one way to trade this. Your stop loss can change depending on your own risk tolerance. Your take profits will change depending on your risk to reward ratio goals and how you want to measure that out for yourself. And again, I do go more in depth in my Discord, breaking down the exact where I enter, stop loss, take profits, when I do break evens, and some other strategies that you had saw in the video with the supply and demand being integrated in there for maybe a second entry, or just to kind of confirm your bias on the trade. There's many ways you can use this to your advantage. I appreciate you guys for watching the video. Leave a like and subscribe. Thank you guys.